Good morning, everybody. We have a mostly higher trade in the grain markets here early on Monday morning. It is 6:30 a.m. Central Time. March corn futures up 7.25 at 554.25. March soybeans up 4.75 at 1374.75. March Chicago wheat is up 0.75 cents at 663.75. March Kansas City wheat is down 2 at 636. So we did see a new high in the spot month corn contracts overnight, and stronger trade in the soybean market as well. It's February 1st. The spring crop insurance pricing period begins today. December 21 corn futures closed near 445 on Friday. That's the best level for a December contract seasonally since 2014. The November soybean contract closed at 1143 on Friday. That's the best level for a November soybean contract since 2013. So U.S. row crop farmers are set up at this point here to start the month for potentially one of their best years in recent memory, certainly as far as the crop insurance situation goes. Now, sure, the market could fall drastically during the month of February and the average could be much lower, but it appears likely or maybe probable at this point that we see some of the best spring insurance guarantees that we've seen in 7 or 8 years. So that's certainly a positive. China made another massive purchase of U.S. corn on Friday. USDA confirmed another flash sale of 2.1 million metric tons. That's about 83 million bushels on Friday morning. That is the second largest flash sale of U.S. corn on record, behind only a sale of 3.7 million to the USSR in 1991. So just last week, China booked 5.8 million metric tons of U.S. corn. That's 230 million bushels through 4 large flash sales. Trade chatter suggesting that we may see another big purchase or several more big purchases of U.S. corn, maybe this week or next week. The number floating around was another 2 million tons. So we'll see what happens here, but the demand is phenomenal. The trucker strike in Brazil is slated to begin today. I've heard some conflicting reports this morning. I saw a couple sources say that it's not happening. I saw a couple sources say that it is happening. I'll know more, I'm sure, here in the next hour or two. Late last week, it was reported that the truckers and the unions were kind of split on whether or not to strike. So that could potentially be a big deal in regard to the soybean market. Russia is now considering a formula-based wheat export tax beyond June 1st. So the original plan here was that the country would tax wheat to the tune of $60 per ton from March 1st through June 30th. They may now slightly alter that plan. So after June 1st, they may go to this formula-based rate that essentially is 70% of the difference between the price of wheat per ton and $200. So given last week's export price, which was like $293, that would, given that formula, you'd have an even higher tax. It would be like $65 a ton. So this is not a game changer for the wheat market at all right now. But what it demonstrates to me is that these man-made supply disruptions, and that's exactly what this is. This is not a short crop or a shortage. It's a man-made supply disruption. They can be altered by the stroke of a pen, and it takes nothing more than that. So while the situation here with Russia appears to be friendly and may push some additional wheat business to the U.S. here, it can be changed at any time. And when it does change, there's probably not going to be much warning. That would be my guess. Much of the U.S. plains will remain dry through the next 2 weeks. A lot of North Dakota, South Dakota, Kansas, Oklahoma, northern Texas, they'll see less than an inch of rain in total or precipitation between now and, say, February 17th. A lot of areas are going to only see about half an inch during that time frame. Some better precipitation expected in parts of Nebraska, parts of Iowa, southern Minnesota, and into the central Corn Belt. But you've still got drought firmly in place to some degree in most of North Dakota, South Dakota, Nebraska, a lot of western Iowa, northern Kansas, and the Texas, Oklahoma panhandle area. USDA will release its monthly crop production and WASDE report on Tuesday, February 9th. So that's a week from tomorrow. I think traders generally expect a friendly tone here, especially in regard to corn. Keep in mind that in last month's report in January, USDA reduced its export its expectation for corn exports by 100 million bushels. So given all of this additional demand, I mean, they're going to need to come back up by 100 million and go back to where they were in November at the very least. or in December rather, and they may need to go above and beyond that. They may need to raise this export forecast by 150 or 200 million bushels next week. So you've got some talk circulating among the trade here that this U.S. corn carryout could be, closer to 1 billion bushels and not the 1.55 that USDA projected last month. So certainly a changing situation here. But I think going into that report, what you've got to realize is that a lot of this friendliness is being discounted into the marketplace right now. When they raise that export forecast on Tuesday morning, in all likelihood, I don't think it's going to be a surprise necessarily to a ton of people. Fund traders remain aggressively long the grain complex. The most obvious example is in the corn. Funds were estimated to be net long 381,000 contracts of corn on Friday, which is not a record, but it's pretty close. Funds hold a hefty net long in soybeans, although they peeled that back. It was quite a bit bigger in October, November. Funds hold a modest long in the SRW wheat market. I'm going to show you a chart here. This is combined fund length across corn, soybeans, and SRW wheat. It was estimated at 549,000 contracts, which is there were only 2 other occasions at which the funds were long more grains than this. There was once in 2011 and then 2012, and beyond that, I mean, this is about as big as it gets in terms of fund length. To this point, we haven't been much bigger than this. So large speculators still continue to hold a very friendly stance here in regard to these markets. The cattle market last week, we didn't see much at all in terms of cash cattle trade. I think that the traders perhaps in the cash market at least were maybe waiting on that cattle inventory report, which was out on Friday. And the inventory report was mostly neutral. I don't think that there's anything there that's going to really move the market here short term. Now, some people say that the report is indicative of perhaps a top in cattle numbers. We were down just a little bit in most of these categories, but we'll see how the cattle market handles that this morning. In the outside markets, we've got the stock market higher, recovering from some losses late last week. The Dow's up 240, S&P's up 39 points. Precious metals are higher. Silver's up sharply. It's up $3. Big move there. There's been a lot of news about that. Gold's up $18. US dollar is a little bit higher. Bonds are a little bit higher. Crude oil is up 58 cents in the March WTI at 52.78. Remember, guys, if you need some more information from me, go to my website. It is www.standardgrain.com. Go to the website, click on Grain Marketing Plan here in the upper right-hand corner. For $49 a month, I'll send you my morning email, which goes out every business day at 6:30 a.m. Central Time. It includes any overnight headline that you need to be aware of, all my grain marketing recommendations. I break down my corn, soybean, and wheat sales by crop year, by percentage. You don't need to be a futures or options trader to participate. You don't need to have a trading account. You can simply look at this email every day and the text message service if you want, and you can cancel it at any time. It's built to your credit card automatically once a month. Really nice deal if you're looking for some improvement this year. Everybody have a wonderful day. Have a wonderful week. I'll talk to you a little bit later.